What's up, guys? Welcome back to another episode of Stock Talk with David. In this video, we're continuing our options learning series. This is video number 3. We're going to be talking about different strategies, primarily around the call spreads. These are the easiest ones to learn. And so if you haven't watched the other videos, be sure to check those out before watching this one, okay? So the very first thing we're talking about here is options. The problem with options is that they can be extremely expensive. And why is that? Well, because you're basically putting a all or nothing deposit down on the stock. Remember how we talked about last time, you put it all on there. It either makes money or it doesn't, right? And so if it doesn't make money, if it doesn't expire in the money or expire with value, you lose your premium, you lose what you put in there. Now there's different ways that we can actually limit our exposure on the stock, or on the option rather. And the way that we would do this is we would create what's called a spread. This is a bull call spread, and it works primarily the same way for the put spread too, but this is the bull call spread. A bull call spread is an option strategy. It's designed to benefit from the stock's limited increase in price. We'll talk about that. The strategy uses 2 call options to create a range, and it uses a lower strike price and upper strike price, and it helps limit the losses of owning the stock or the option, but it will also cap the gains, right? So I'm going to pull up here our options chain. I'm going to make a quick little options play. I'm going to go to the risk profile. So if you remember last time what our payoff diagram looked like, it kind of looked like this, except on the upside there was an unlimited, right? It kind of looked more like it had an unlimited gain, whereas here, because we're adding a short side or a short call option, we're short selling the call option, we now have this, we have a capped gain, right? The most we can make here would be 8,400. Right, you see that right there, you can see that number. And same thing here, our max gain is actually limited because we now have this short credit that we're taking in, right? By selling this, we receive a credit too. We take it off, we lose 10,000, we keep it on, we only lose 6,500. So that's pretty significant, right? So you can see here that as time passes by, the option will tend to make more and more according to the stock price. Eventually it hits the point where it quits making money, and that would actually be at the 175 spot, right? Because I went here to the 175, I shorted that option. Once we hit 175, the option can't really make any more money, okay? Do you guys see that right there, how it's 175, 175, it just kind of quits making the money, right? If any, but not much after that, right? So if I were to take it off, you could see that I would have unlimited upside, but I'd have limited downside. But think about it this with an option, is that am I really going to have an unlimited stock price? Like, is it really that reasonable for me to hit 210, 220 in a matter of days, right? Not really. So you should always be trading in a spread like this because it will help limit your losses. It also gives you some realistic price targets. You know, if your price target is, let's say, 170, maybe you might go to 175, short sell that one, and now you have a $15 wide spread, and hopefully the math makes out for you guys as well, right? So it's the same thing with puts as well. I'm going to clear these out. And now you can see that I have the puts pulled up here on the video, on the screen, and now we can check out, we can see that the max I'm going to make here is 10,450 right here on this top one. The max I can lose is 4,500. That's because I have my short option, my short put option, limiting my losses, right? Does that make sense to you guys? You can see it right there. So that's an easy way to use these options. If you can understand this one, so to recap, if you guys can understand this one strategy, everything else in options will become a lot easier when we move into a more complex strategy like a calendar spread, which I use a lot, or we could use using naked options as well, which is a completely different category, a lot more risk involved. But if you understand the concept of at least the spreads, everything else gets a lot better. So keep an eye out for the next video. We're going to be talking more about more advanced strategies, how to collect a little more income on these trades, how to keep the cash register always ringing. Learn from this video, be sure to subscribe for more. I'll be posting the best strategies that you can use to make money and to maximize your returns.